Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, December 21st, 2020. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index falling to an immediate term oversold cycle low last week, down now minus 2.5% in the last month alone, reminding us that correlation risk does matter, with the US dollar in a 15-day duration running a inverse correlation of minus 0.82 with the SPY, minus 0.85 on WTI oil, and now minus 0.87 on gold. You have the euro versus the US dollar up 1.2% last week and now up 3.4% in the last month alone, but signaling prior to this early session move, immediate term overbought within its bullish trend, trending on a 90-day basis. You had the yen versus the US dollar up 0.7% last week and continues to signal both bullish on both a 15-day as well as on a 90-day trend duration. You had the British pound ramp versus the US dollar ramp up 2.3% last week and also continues to signal similar to the euro immediate term overbought within its bullish trend, trending on a 90-day basis. And now in conjunction with the new cycle low for the US dollar, you have a new cycle high return in commodities. The CRB index inflated another 3.2% last week, but is also now signaling immediate term overbought. You have, if you continue to break that down, WTI inflated 5.4% last week to $49 a barrel, but is also signaling immediate term overbought. And copper inflating 3.0% last week to another cycle high at $3.63 a pound, and continues to signal immediate term overbought as well. And if you touch on something like lumber on a 1 month duration, that's also up now over 28% or so. In terms of other cross-asset allocations, you have tech continuing to reemerge as a top equity sector style, up 3.2% on the week. Touching on rates, you got the yield curve steeping to a new cycle high of 83 basis points wide on the 10s, 2s, and you have the yield curve steepening now 13 basis points in the last month alone, with most of that coming along the long side of the curve, with the U.S. 10-year yield ramping up to 0.96, approaching the top end of its respective range. So with that, you have the gold market certainly does not like that at all. In terms of its full cycle peak in Q3 of 18, it's now down over 3.5% in the last month alone, which again is a product of the prospect of real rates continuing to rise. So as a last note here, you want to continue to fade that move in the 10-year, call it anywhere between 87 to 89 for a move back up to around 1% or so. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.